All
Okay.
right, so 6 o'clock. I want to appreciate Kristen's time. She has been nice enough to come on with us and give us a really in-depth look at private money lending. Lance will also be here. So Lance will be fielding questions. I will be fielding questions, and we will be letting Christine kind of expand on all of it. So Lance, you want to take it away and we'll get started.
Yeah, first off, I'd like to say, hey, thanks everyone for showing up. There's a nasty storm here in East Texas going on, so if I break, I apologize. I might turn off my camera. But that being said, yeah, I'm excited to be here. Happy to have everyone on, and wanted to introduce you guys to a private money and Christine Labounty is her name. We're just gonna kind of hang out with her and pick her brain and have some questions at the end. So, and if you have questions you want to answer, you can raise
Yeah,
your hand.
Lance, you
But
are breaking up. Your audio is breaking
am
up
I?
bad.
Okay.
Yeah, try to turn off. I'd say just turn off your video.
Okay. Yeah. I've been off. How's that?
Better, much
Is
better.
that better?
Yeah.
Okay. Sorry, guys. So our guest, Christine Labounty, we're gonna talk to her a little bit. We have some questions set up to hopefully add value to you guys tonight. So that's kind of our mission on this, is to add value and to have some fun with it. So let's get right into it, man. First off, hello, Christine. How are you doing
Hey,
tonight?
Lance. Hey, I hate this, man, but you're breaking up
Yeah.
really bad. It's hard to hear. So let me.
Okay.
I'll just run the questions. It's tough to hear. So, anyways, Christine,
Okay.
I'll take it away. So let's just start by taking a look at your journey. I just want to we as a group just want to learn a little bit about you, and kind of how you started, where how you ended up here.
Yeah, great question. Well, thank you for having me, and it's great to be here. So for those who don't know me, my name's Christine Labounty. I am based here in San Diego, California. I work full-time as a residential realtor. So I've been in the real estate industry going on about 8 years, and run a pretty robust business and team around me here locally. But my background is actually marketing PR. Before I got into real estate, I worked for some pretty heavy hitter billion-dollar companies doing marketing and PR, which has truthfully really lent itself for kind of everything we do in our business now, right? Everything is about marketing yourself as a realtor, as a wholesaler, as a borrower, as a private money lender. So it's proven quite useful, many of the skills I picked up along the way. And I grew up in the industry. I have about 5 or 6 real estate professionals in my family. They work in both residential and commercial real estate up and down the Southern California coastline. So quite a few of them in Los Angeles and Orange County, and I'm the San Diego branch, if you will. So you can only imagine what dinner conversations look like. And I work with a full gamut of clientele. So I work with traditional buyers and sellers, but I also work with quite a few developers, investors, fix and flippers, wholesalers, portfolio investors, just like, you name it, I've seen it. And I've been able to gain a lot of perspective, servicing those clients from like a realtor perspective, but also working with them hand in hand as a private money lender, and as a partner to the transaction.
Great. Yeah. So explain to me just a little bit about the journey. I think, obviously from real estate and that background, but maybe specifically the journey into private money lending. What brought you there?
Yeah, so it's a great question. Obviously, as I mentioned, just by the nature of what I do full time, I had some insight into it. I would work with clients that were obtaining private money lending and financing. I would represent fix and flippers that were obtaining financing via that route, as well as hard money lending. So that was kind of my first little taste of it. To be honest, I really didn't ever consider it as something approachable for myself to get into really until I joined Sub 2 and started learning everything that Pace was teaching within his community, and started realizing and connecting the dots about the different ways that I myself could get involved. Here in Southern California, I'm blessed to sell some really beautiful real estate. And over the years, I had kind of built up a nice little nest egg. But I had a bit of analysis paralysis of what to do with it, right? And I would explore certain things and then kind of talk myself out of it. And learning what I did, and with the exposure and the connections that the Sub 2 community gave me, I felt a lot more confident approaching that avenue. And so I ended up pursuing it. I, tripped and fell along the way, learned some important lessons, lost some money, but made a lot more. And that's kind of how I've landed where I am now.
Okay. So I guess in speaking to that, what did entry into the space look like? And specifically, just taking it back to that Sub 2, I know that, Pace preaches networking. We know in real estate, if you're not networking and talking, you're in the wrong business. So how much of it, I guess, was a hurdle in terms of networking yourself into that space as you got started? And then what did entry actually look like?
So it was a lot of observation and absorbing in the beginning stages, right? I really wanted to make sure that I didn't just recklessly jump into it. Again, as Pace preaches, as I will preach, the number one goal is to not lose money. So really understanding the space and really feeling confident in your own ability to navigate it correctly is so important. I think sometimes people see the potential dollar signs and they get really excited and they dive in a little in a disorganized manner. And that's when you have the higher likelihood of potentially losing some money. So I started networking. I started putting out the feelers and telling people, right? The squeaky wheel gets the grease. So I started telling people first and foremost, hey, I have capital. I don't know what to do with it. I'm not ready to start buying up property left and right. So I would love to help finance some of, your transactions, and we'll get into it in a little, but there are obviously lots of different ways that you can lend money, lots of different ways you can borrow money. And so I started just establishing and growing those relationships. And honestly, a lot of it was word of mouth. I got in the community, I got really loud. I began identifying the big players in the community, introducing myself, putting myself out there, marketing myself. Hey, here's how I can bring you value. In addition to just lending you money, I also, I'm a realtor, right? So I know how to underwrite. I know the questions to ask when you're looking at investment opportunities. I know what a traditional buyer is going to be looking for and what characteristics affect resale. So I was also positioning myself as somebody that could bring value to you outside of just handing some money over. And so I started kind of, learning and growing contacts. And then I approached it in an organized fashion. I began growing a database of members of the community that I know had pretty consistent funding needs, and establishing ongoing consistent communication with them. And that's probably kind of how I initially got started.
Yeah. So any shout outs that you would like to give as your the person that, helped you the most, maybe as you were networking and to learn about this space?
Well, I mean, first and foremost, Pace. Pace provides the resources that you need to really protect yourself. I mean, he has so many resources and documentation structured and available to his community, literally designed by attorneys to protect you. Do I think that you should go one step further and ensure that as you're pulling in those documents and those resources, that you're customizing it, I do think at some point, like you should get an attorney involved that you kind of have on retainer to look everything over and make sure that you are as protected as you think you are, because the reality is real estate law does vary state to state. So you want to make sure that you're very cognizant of your own market's parameters from both the borrower side and from the lending side. But that community, hands down, is really what encouraged me and facilitated, a rather smooth entry into this space. There were definitely some bumps along the way, but I owe pretty much everything, from that side of things to the resources available to me in the community.
So then that would lead into, how did you come across the Sub-2 community? I'd love to hear this story from everyone because it's different for us all.
Yeah. Again, word of mouth. I actually got a referral from a Sub-2 community member into the community. So like I said, I've been in real estate for some time. I live in beautiful Southern California. We have lots of beautiful real estate here. I had built up a nest egg, didn't know what to do with it, knew I wanted to start growing a portfolio of my own, and did not want to do that in California because most of us don't really want to be long-term landlords here in California due to some of the state laws kind of working against landlords. So I was looking at out-of-state opportunities and how to scale that quickly. And in doing so, what you focus on expands. One of my college friends that I follow on social media started posting about properties he was acquiring with other people's money. And it was like all over his feed, left and right. And all of a sudden he was buying this house and this house and this house in Ohio and this market and this market. And he's here in California. And I finally reached out to him and asked, what are you doing? How are you doing it this quickly? Like, I wanted him to give me a masterclass on it. And he's like, he jumped on a call with me. We spent about an hour talking, and he just kept name dropping pace, Sub-2. And he encouraged me. He was trying to be diplomatic about it. He encouraged me to explore several different, mentorships and whatnot. But obviously I went straight to pace because that's where he had found all his success. And I think I watched like 3 Instagram videos and I was sold, and I signed up for Sub-2 the next day.
Yeah, I think my journey is very much at the end of the road that way. I was sold, and I mean, there was no looking back. I don't even know if I can describe to people the community unless you're in it, right? So I guess getting into the nitty gritty of the whole thing. So let's start talking about the process of private lending. Can you tell me about any licensing that was involved? Any, is there any, and I guess that may vary from state to state, but I guess in terms of where you're at, maybe you can give that explanation.
Yes, that's a great question. And this is where it's important to really be mindful of what you're doing, how you're structuring it, what you're calling it. Because no, I did not obtain any licensing. What I do is JV on transactions and partnerships and whatnot. So I am very careful to make sure that I'm structuring my private money in a manner that protects both me and the borrower. Again, it varies from market to market. And that is definitely one of the things that someone like Pace, who kind of walks people through how to approach the sector appropriately, he really emphasizes and goes into that in lots of detail. So you do want to be careful. You want to make sure the agreements that are in place are structured appropriately so that you have the appropriate paper trail to keep you out of trouble.
Right. And I think probably to summate that is, in my simplistic terms, make sure you're tying it to the asset, right? Mm-hmm. Yeah. So, all right, let's move on to the next one here. So how do you retain funds to lend? Are you using business credit, personal funds? I've heard, and maybe you can expand on that, but I've heard some varying, some varying opinions about this. Some people have a lot of funds to spend of their own. Some people try to do it strictly based on building business credit and no doc loans, low doc loans, those type things?
Yeah, great question. So I do a little bit of both. I do have my own personal funds that I leverage for certain types of transactions. And I also have business credit that I have accrued, and I use business lines of credit to fund deals as well. So it's helpful to point out that really anyone can get into the space with the right resources and knowledge. If you are someone that maybe doesn't have access to personal funds and you want to explore the business line of credit route, there are companies and businesses that this is all they do. They help you build your business credit, right? And it's done in much the same way that personal credit is built. So I have an LLC, a business LLC that I use for these partnerships, and it has built up its own line of business credit just from building credit over what's now been over the years. But someone getting started can absolutely go do that. And I would encourage you to do so in an organized fashion by looking into some of these like credit building like companies that make a business out of this. There are a few different ones. I know Pace promotes one in particular, but there are a few that I've heard. And what you do is you build up credibility with your business name, and eventually you'll start getting approved for business lines of credit. And you can then apply for lines of credit that have like 0% interest for the first 12 months. And you can take those lines of credit and use that to get into Peter lending, private money lending, whatever you want to call it. And that way you're not using any of your own money, and you're using lines of credit that have 0% interest for the first 12 months. So for 12 months, you use those lines, you go out, you make more money, and then you go and apply for additional lines of credit with a new rolling 12 months of no interest. And that's how a lot of people with no personal funds to kickstart with really like grow their own nest egg in the space. And it works really well if done correctly. And I know a lot of people that have achieved great success with that. Like I said, I do a little bit of that as well. From the personal funds perspective, just as it sounds, I have a certain designated kind of amount that I'm comfortable lending at any one given time. And so I do use personal funds as well. But it's important when you're using personal funds that you make sure that you truly have the capacity to do that. You don't want to be lending out funds that you are worried that you may need, suddenly, in an emergency or this, that, the other, right? Because the reality is if your funds are tied up with a borrower and you've committed to that partnership for a set period of time, you need to treat that like a true proper loan. Your funds are accounted for, and so you don't have access to them. And so I have seen people that kind of overextend themselves and get in a scenario where they need to pay taxes or they need to pay their mortgage or something happens and they want to access those funds and they can't. So you really just want to be very cautious about when you're using your own funds that you truly have, a surplus that can be designated to this, for whatever period of time you're planning to obligate it to, a borrower.
So let me add to that question as well, just because in what you're talking about, I was interested as you were talking about it. So I think that would also play to timelines, right? I mean, if you've got X amount, you have to be aware, hey, I'm going to borrow out 0 to 3, 0 to 6, Can you kind of talk about how you gauge yourself for where you're comfortable landing in time frame?
Absolutely. And that's a great question, because the reality is, much like a standard real estate transaction, there are a million different ways that you can structure it. And so with private money lending, I know some private money lenders that all they do are transactional loans. They're literally doing like double closings for like 48 hours. And maybe they're funding the whole deal to allow the wholesaler or the end buyer to do a double close. Or they're providing temporary EMD funds, that won't go beyond 30 days, the 30-day standard escrow period. There's fix and flip opportunities where you can fund a flip for somebody. Those are typically anywhere from like 3 to 9 months. Again, and we'll get into this a little later, you really want to make sure you're very clear on what the project is and what the need and timeline is, because what the borrower says it is not always really truly what it's going to look like for you. And then there are like longer term loans where some lenders will loan for 1 to 2 to 3 years. And all they're really looking for is a steady return on their money. They're just trying to curb inflation. And so it's really dependent on your comfortability, what you're willing to, your kind of like risk tolerance, what return you're looking for, how quickly you need the funds back, how quickly you want the funds back. So it really varies. And that's one of the important things when you're promoting yourself that you're really clear on. Otherwise, you're going to get tons of calls from borrowers that maybe are not in your specific kind of lending box, if you will.
Yeah, interesting. How do you qualify the loan? So the person, the relationship, how do you like the loan request to be presented? Just a really good description here. Hopefully an example of how you like the presentation structured. This kind of a teaching those that don't know how to make a professional presentation to a private money lender, because I know that we discussed this offline before we got on, in our initial conversation, that many people kind of have the attitude, they get in touch with a private money lender and it's, hey, can you loan me some money? I mean, it's just really effectively that, right?
Yeah. So I have seen the full gamut. I have had, sometimes I don't even get a call. Sometimes I get a text. I've seen literally something that says, hey, are you lending money?
Yeah.
With like no information. Sometimes it doesn't even have a name. Those I don't even respond to because, I'm busy. I don't have time. And that tells me that you're either not organized, not professional, or not serious. And I'm not interested in working with any of those 3 characteristics if I'm going to be, loaning money to you. And then I've seen the complete opposite. I've seen people that have literally emailed me presentations with comps, photos, analysis. And then I've seen everything in between, right? So when someone's reaching out to me, and this is where my marketing and PR background is really you're going to see it start to trickle in. What seems to have the most profound impact on me and what would set you up as somebody that I would more seriously consider would be, being professional and organized right out the gate. Don't call me if you don't have all of your numbers down, all of your details, comps ready, your exit strategies established. I want to know if you're at the point where you're willing to call me and ask for money. This is probably more assuming that you're asking for maybe me to fund a full deal for you or fund the construction project. If you're just looking for EMD, that's a little different. You may not have figured all that out, or you may be wholesaling it out. So again, it's all within context, right? But let's say you're coming to me and you have like a project that you are looking for funding on. I always tell people, give me a call. People don't always answer phone calls from people they don't know, right? So I always recommend, just in practice in my own business, I always send a text to somebody after the fact. Hey, I left you a message. My name's so-and-so. I wanted to reach out because I'm looking for some private money lending, and I got your name off a list or from so-and-so. I would love to take a few minutes of your time and present to you the investment opportunity that I have in front of me. When would be a good time to speak? And that would be a very professional text. That would be something of that nature in a voicemail would also be fantastic. And that would be somebody that I would get back to right away. If I wasn't available to speak in that moment, I would text you back and we would set up a time to jump on a call. On that initial call, I'm going to field you a lot of the questions that I'm hoping you're going to be able to answer and subsequently email me after the fact. Tell me about tell me about the opportunity. I'm going to want to know, where is it located? What type of neighborhood is it? What is the scope of the project? How many of these projects have you done before? Are you familiar with this area? Have your projects been in this area, or have they been across town in a totally different neighborhood? How experienced are you and the people working for you? Are you ready to go? Are you getting financing from any other avenues? Am I going to be first lien holder, second lien holder? Because what I'm trying to gauge is, what is my risk tolerance with this? How dialed in are you on this project? And then I'm going to want to analyze the project before me. What are your exit strategies? And I say strategies plural because I want to know that you have more than just one, because we all know that one exit strategy doesn't always work out. Maybe your plan is to do a cosmetic flip and sell this. What happens if interest rates shoot up to 8% and you can't get this thing sold? Do you have the wherewithal to rent this out? And if so, are you going to be able to replace my funds if I don't want to sit in it for a year with somebody else? Are you able to cross collateralize? If something goes wrong with this deal and you don't make the money that you say you're going to make, I want to make sure that not only is my principal loan being replaced and returned, but that the interest or the return that you're giving me is being sent to me as well, right? Because if this project isn't successful for you, at the end of the day, most private money lenders are going to say, well, that's not my problem. We have a deed of trust, and a promissory note that says this is your obligation to me. So I need to know that you are able to cross collateralize and pull that money from maybe an existing portfolio you have or what have you. And then I'm going to dial in on you because, as we all know, you can have a fantastic project and a terrible operator and the project fails. You can have a not so great project and a fantastic operator and the project does much better than anyone anticipated, right? So I am also, as you're telling me this, I am analyzing you as a person. How professional are you? How organized are you? Are you able to answer all my questions? For those questions you can't answer, are you just saying, well, I don't know? Or are you saying, you know what, that's a great question. Let me get back to you on that. I want to know your experience level, who's involved. I'm wanting to know about you, because I want to make sure that the person I'm working with is somebody that I trust to be honest with me, that I trust to communicate with me. And that seems really like dialed in. I don't need you to be somebody that's been doing this for 35 years. I just need to know that you have well thought out this investment, and that you're dialed in, you're professional, you're organized. Like that's really what I'm looking for when I'm analyzing these. And then once we get off the phone and I go through those questions with you, I'm going to say, okay, can you email me all of this information? I want to be able to look at it all at once. And I'll get back to you, within 24 hours. And I'll ask, when do you need a decision by? What is this timeline? Are you closing next week? Are you closing in 30 days? I mean, I've had people that literally are coming to me and they're like, my other, lender backed out and we're supposed to close tomorrow and I'm panicking, what are you able to do for me? So knowing what your timeline is important too, because then I know how much time I have to review the deal. And in some cases I have asked for referrals. I've said to somebody, there was an Astro Mastermind student that came to me that had worked on previous deals with some other Astro Mastermind students, and she was venturing off into projects of her own. And so from that perspective, she was new, but she had participated in projects past, and she had borrowed from previous members in both the Sub 2 and Astro communities. And so I asked her, I was a little uncertain about just the project and the overall sense of things. And so I said, hey, would you be comfortable with providing me with some of your past lenders? And would it be okay if I reached out to them and just asked, what their experience was working with you? And she said, I'm okay with that. Let me make sure they're okay with me giving you, their information. And so she came back with 2 or 3 previous people she had worked with, and I called them up, and what I was really looking for is A, did you get your money? And B, was she communicative? Because and this is where you'll, as the borrower, start to get a sense of what type of private money lender you're talking to, because all of us vary. I'm someone that I like consistent updates, right? I'm a realtor. I know transactions can turn on a dime, and I want to just know once or twice a week, how things are chugging along. Some private money lenders that are in it for a couple of years will say, give me an update once a quarter. Some will say once a week, some will say every other day. It really just depends. And that's an important question for you as the borrower to ask and make sure that you're sharing with them and you're aligned with, right? Because communication's everything. Things go wrong. I have had plenty of borrowers that, it was supposed to be a 2 or 3 week loan, and it turns into a 12-week loan, and we make it work. And I'm okay with that as long as I know that you're being honest with me and you're communicating. I don't usually have too much of a problem with it. It's when I can't get a hold of somebody, or I feel like you're not giving me all the information I need. That's when that starts to make us a little nervous and edgy.
Yeah, I would definitely say, in everything in this industry, it's a reciprocal relationship, and you're building a relationship with people. And I think that pay stresses us, all of the time. And even away from the private money lending side, when people are bringing me deals as a sub-2 student, they are kind of like, hey, here's this deal. And I'm like, did you do any of the back work on this before you brought it to me? Because I am also trying to run a business.
Mm-hmm.
So I don't have time to do all of the work for you.
Right.
Yeah. So yeah, I have to know that you can kind of tie your shoes and walk out the front door on your own. You know what I mean? Yeah. So with that, I mean, that's a massively valuable explanation that you just gave us, because I feel like so many people can learn and understand exactly what it is that you're looking for. It's important. So what paperwork is necessary for you to be able to secure the loan? I.e. promissory notes, deed of trust, insurance, a thorough descriptive here would be great. So people can kind of understand the work that actually goes into this for you, also so that they can understand the work that goes into it for them, and possibly examples of that paperwork, as it pertains to California. Of course, you can't speak to paperwork in Texas, but we really want to focus in here. And we want people to understand why due diligence and professionalism on the part of the investor is just vitally important.
Yeah. So I think that's a really great question. There are 4 main components in terms of paperwork that should be completed for a transaction closing, especially if you're obtaining funds, but really in any real estate transaction, you're going to have your deed of trust, or your kind of security document, right? Security deed. That's what gets filed with the county. That's what outlines you as a lien holder and goes on record. The promissory note, without this, the security deed doesn't really mean much. So the promissory note is basically what outlines all of the terms of the arrangement, right? What the principal amount is, who's involved, if there is some sort of return, the length of time. It has all of the details outlined on it. A lender's title policy is also really important to protect both you as the borrower and your private money lender. Most private money lenders will ask their borrower to pay for it. So there's an owner's title policy, and then you can get a lender's title policy. The lender's title policy is usually a lot cheaper than the owner's title policy, but it's essentially protecting me against any clouts on title. And the 4th component would obviously be property insurance, right? I want to make sure, especially if I'm the primary lien holder on a property, I want to make sure that, if a tornado comes through tomorrow and the property fails to exist, that my investment is protected, right? And so I always ask for a copy of the insurance policy. And this is something that if you were getting a traditional bank mortgage, they require you to have property insurance. Obviously, that's required to be submitted into escrow and into underwriting with the lender prior to closing. Same thing if you're obtaining private money.
Okay. So can you expand on that just a little bit on the insurance policy side of it? Do you require them to kind of bump that insurance policy up a bit so that we know that we are, completely protected?
And this is again where it varies, right? I mean, there are some private money lenders that may not require a lender's title policy. I always do. It's not necessarily, I don't want to say that. Yes, in theory, it should be for the full amount that you're obtaining for the loan. Again, you want your lender to be protected. You certainly don't want them coming after you for anything. So it is inadvertently protecting you as well. What the lender's most concerned about is if somebody comes after you, the lawsuit or what have you, I want to make sure that I'm protected. Now, this is a little more applicable for like longer term loans. If I'm lending you money, for 30 days, I may be less concerned with it. But you should have title policies in place. You'll have a preliminary title report that should go over any clouts on title, but then the title policy is really what protects any errors or new incidents that occur with the property.
Okay. So once everything is done, everything is said and done. So what does the structure of payback look like for you? How are you qualifying or quantitating terms? What are the terms? And I know this isn't a one size fits all, but what are the terms that you may lay out? Basically, what is your process to get there? And once you get there, what does it look like?
It's a good question. And like you said, one size does not fit all. You will find different types of lenders that feel comfortable lending different amounts of money in different scenarios. So some lenders don't like to send their funds off for more than, 5 to 7 days. Others don't want it back for 2 to 3 years. And then there's everything in between. Some lenders, especially recently, are a lot more hesitant to fund fix and flips because just in the market with rates and everything else, those have a little bit of an elevated risk associated with them. So in terms of like how I structure my partnerships, it honestly varies. I don't have a one size fits all. I don't have like a set return. I will usually jump on a call with you, listen to the opportunity. And if it's something right out the gate that I'm like, I just don't, that's not something that makes much sense right now. Or I look at my funding calendar and I say, you know what, most of my funds are tied up right now. I'm not even going to have the opportunity to get those back by the time you need this. So I'm not going to be a good fit, but go ahead and put me, on a list of people to call, the next time around or what have you. And I'm also gauging risk factor. I personally do shorter term loans. I'm also a buyer. I have a portfolio of properties. If I get a good opportunity, I want to make sure I can act on it. So I don't really like sending my money out for 4 months is kind of my cap. So I'm not one in the long-term lending game unless it's a very specific scenario or unless we're partnering in the long term and you're giving me equity. There are other lenders that varies. They're very comfortable with, a standard 10%, 10 to 12% return. And then I kind of specialize a little bit more in like the emergency scenarios. So I can fund in a day or two. I can be very quick with it. But it's going to cost you a little bit more and I'm going to charge you a higher return. If you're trying to put me as a secondary lien position, as opposed to a first lien position, I'm going to charge you for it, right? So I'm really looking at what the risk factor is, both with the property and with you. If you're newer and a little greener, and I can tell that I'm almost going to have to kind of walk you through some stuff, or I'm going to have to walk you through the paperwork, or I'm going to have to weigh in a little bit on the property or project itself, I'm going to charge you for it, right? So it really varies. And I get that question a lot. People will call me and say, well, what's your rate? And I'm like, well, what's your opportunity? Tell me a little bit about the project, tell me about you, and then I'll get back to you and I'll let you know kind of what I'm thinking. And sometimes there's a little bit of negotiating. I mean, sometimes I'll say, we'll have a great call. I'll say, email me the information. They'll email it to me. I'll look it over. And sometimes the next day, I'll throw out some numbers. Oftentimes I'll ask, what are you proposing? In a sales tactic is, he who speaks first loses, right? So oftentimes I want you to tell me what you're thinking. And then if I feel like it's, too low or not worth the risk, I'll tell you. I'll say, what? I feel like there's a little bit of risk involved. Here's why, here's what I'm looking at. Here's what I have concerns with. At that rate, it just doesn't make sense for me. It's not worth the time and kind of the anxiety of, getting everything out in a new relationship. But if you have difficulty finding funding elsewhere and you want to come back and have another conversation with me, great, let's do that. Here's kind of what I'm thinking. And I've had some people that say, what, I'll take it. I've had some people say, well, what if we met in the middle, or what if we did this? And we've kind of negotiated. And then I've had some people that it doesn't work for them and they walk away, and sometimes they come back 2 days later and say, I can't find funding, I'll take it. So again, it's a conversation, right? And it evolves, right? I'm in the relationship business. I'm a realtor. I believe in relationships. I now have very good relationships with some of the borrowers that I've worked with. There are some Astro and Sub 2 mastermind students that I went back to Arizona for an event recently, and I finally got to meet a couple of them in person, and we hung out all night and we had a great time. And I know, a lot about their personal lives, and they'll send me photos of their kids or their pets or whatnot, or their projects. And it's a relationship game. And I feel comfortable with those people because now we've worked together several times. And if those people were to come to me with an emergency, I would be a lot more willing and forgiving to help them, or take a higher risk. Because I know them and I know they're going to, act on what they say. And I trust them, and there's a relationship there. Right. And so I will prioritize them over other opportunities. I'll take more risk with them. I'll give them extensions. I'm a lot more flexible with them. I'll charge them, a little less because it's a tried and true formula. So it's really a relationship business. If you are somebody who's doing a lot of business and a lot of projects and you're looking for private money lenders, you should absolutely be in it for the relationship game and like the long term. And you should hopefully over time with your business, you should be able to lock in 3 to 5 private money lenders that are go-tos that you trust, that trust you. And then your business is really going to be able to scale quite quickly. Same thing with the lending side of things. I don't even really put out feelers anymore because I just have there's too many things popping on my plate and people wanting money. I have kind of my go-tos now that I feel really comfortable with, and I prioritize them very much so. And I used to really keep my agreements very short. I wanted my money back quick, and I charged you a lot for it. Because again, I was kind of like an emergency lender. And now I'll let my money sit with some of my borrowers for quite a long time because I trust them and I care about them. And now we have a friendship, and the relationship has really, grown and evolved, and I trust them.
Yeah, I love that so much. I think I'm a lot like Pace that way in that, I'm a connector and I like to build relationships. I'm also a closer. If you get me in front of that person, I'll close that deal. Much like you, I'm an agent here in the Texas area. But I even though there is a module of business involved, I really do care about people at the end of the day. It's important, right? So yeah, amazing. So the worst case scenario has happened. What does it look like if they're going into default? What, I know that's like the worst case scenario, but what does that look like for you? What is the process that gets followed?
Yes, so it's a good question, and I've been in that situation. When I first got in sub two, I got involved with a set of partners that I was led to believe were a lot more experienced than they were. They ended up losing quite a bit of money for quite a bit of students. They're no longer, unfortunately, in the community, but I had done some EMD lending for them, but then there was an actual project and home that they acquired. And I hadn't learned enough. I didn't do enough due diligence. It was in a market that in hindsight, I never would have invested in, because as a private money lender, you should not be providing funds for a project that you aren't okay inheriting. Right? Like that could end up being your house if they start to default and you have to take over that deed and take over that property. That better be a property that you feel confident you can either add to your portfolio and refi out most of your money, or B, sell. And this house was neither of those things. It was in an area of Florida that I would never invest in. And I didn't even really know there were areas of Florida I wouldn't invest in. This was in one of them. It was in a very rough neighborhood. The project itself required far beyond the construction budget that they had told me it required. And they basically ran out of money. I had lent them money for the deal. I'd also lent them money for the project. And they couldn't finish it. And instead of communicating it with me, they, I think, got, intimidated, scared, whatnot, and just stopped communicating with me. I had to go get a real estate attorney in Florida to track them down, to contact them. We were able to successfully get control of the deed. They deeded it over to me. Had they not deeded it over to me, I would have had to take them to court, which would have been a lengthy process. It would have been an expensive process. So we basically cut a deal and said, look, I'll forgive you a portion of these funds if you cooperate and sign over that deed to me so that I can take control of the property and get it sold. And so I did. So I did have to obtain an attorney. Fortunately, with the sub-2 community, I was able to dial in with an attorney that was very familiar with creative financing and this type of scenario. I know there are members of the community, and I have a couple of resources that there are some attorneys that will just charge you a flat fee. She charged me a retainer cost, right? And billed me hourly. It was not pleasant, but I was glad to get her involved very quickly because I didn't want to waste any time. I wanted my money out and I wanted to get that house sold. But I did lose money on that. It was in such a rough, terrible neighborhood. I couldn't even get local realtors to give me the time of day. They would drive over and drive by it and they would call me and be like, I'm not taking this listing. It was that bad, right? So this is what I say when I'm saying vet the project, vet the neighborhood, get on Google Maps and walk around the neighborhood, right? Because had I done that, I would have seen that this was clearly, a drug house and not in a great area. And I mean, it was awful. It was so bad. And, I lost money. I lost a chunk of money. It was sad and scary and it was very stressful and it all happened and exploded when I was on vacation with my family. I couldn't enjoy vacation with my family. I was so stressed out about it because I hadn't yet dialed into who ended up helping me. Fortunately, I was able to leverage the sub-2 community. I finally got in touch with one of the accountability leaders down there. They plugged me into an agent that took on projects like this. And she basically found a international buyer that paid cash and I had to sell at a discount. And it was unfortunate, but I learned some very important lessons. And so that's what I say when people call me asking for private money and they're doing hey, are you a lender? Can you loan me this money with no details? I'm just not even interested in continuing the conversation, right? Because I know what it's like to lose money. And so I am going to vet you and I'm going to vet your project and I'm going to tell you why, and I'll offer constructive feedback. And hopefully as you're doing this, you'll learn and you'll work with people that want to educate you as well. Right. And I can tell the good borrowers gosh, they're so organized, and you can just tell they're passionate about their projects. They're educating me. They're talking to me about, well, in this neighborhood, or like, I'm going to do this, this, and this. I don't need to do this with the construction because of this. And they just start rattling. Right. And that's what I love. Like the minute I start hearing you just talk about the project like that, I get my ears perk up, and I get a lot more interested to kind of continue that conversation. So yeah, you want to be careful, because it is easy to lose money. People are not who they say they are all the time. And you want to make sure you vet it. And that's why for a while I was calling and vetting previous lenders of theirs, because I wanted to make sure that they were who they said they were. I would have them send me previous projects. Like I wanted to see before and after, and like the actual property. And you bet yourself that I went and like looked at title records and made sure that they actually owned it, because had I done that with this Florida property and these Florida, borrowers, I would have quickly realized that they were not who they said they were. So having a good attorney is always helpful. Like I said, PACE provides really fantastic resources that have been documented and created by attorneys. But if this is really a business that you're looking to get into, I strongly recommend that you have someone in your back pocket that you can get legal advice from. If God forbid, something like that go wrong. And now, like I said, I vet projects, and most of the projects that I lend on, I'm kind of like, oh, it wouldn't be the worst thing in the world if I had to take over ownership of this, because this would be a great project, right?
Yeah, it'll be a win. It'll be a win, even if it goes south. Yeah.
Yeah, exactly. So if that's how you're vetting your projects, you'll be pretty well protected.
Well, Kristen, amazing information. I want to try to open up the floor to anybody that would like to ask questions. So if anybody would like to ask questions, let's just raise your hand and I'll unmute you, and Christine will answer. Violet.
Hi, Christine. Thank you so much for doing this, and thanks, Damon. What is the difference between a private money lender and a hard money lender? Is my first question.
Great question. Damon, do you want to answer this? I know you.
Well, I mean, I could, right? I always like to think of private money will loan me more than likely the entire deal, right? I can not only loan the property, but I can, also loan on the repairs and the flip part of it. But hard money lender is normally going to own or give a percentage of that, right? And then 80%, 75%, and then I'm going to have to bring money to the table. Can you correct me if I'm wrong there, Christine?
Yeah. So usually hard money lenders are loans that like fix and flippers, people that are getting quick short-term loans. They're gonna charge quite a bit, and they're really loaning on the property itself, as opposed to anything else. So like my fix and flippers, my investors will go and get hard money lenders that'll usually cover like 70 to 80% loan to value ratio. And then they want private money or personal money from the borrower to cover that remaining like 20 or 30% or what have you. And it varies, right? And hard money lenders really started to crack down during the recent real estate shift. It got a lot harder to qualify for those, or they got really strict on the parameters from the borrower. And so I noticed comparative to like previous seasons, this past, I would say like late summer, early fall seasons, I started getting a lot more calls because people just weren't qualifying for hard money loans. A lot of the hard money lenders either went out of business or like really got nervous and edgy, because instead of the market trending up at like phenomenal rates, the market was kind of stabilizing and or trending down in some areas. And so the parameters changed. And so instead of looking at ARV, based off comps, they were looking at ARV minus 3% per month because things were depreciating and they wanted to account for that. So on a 6-month project, now you're looking at potentially negative 18% off of what you thought that ARV was going to be, right? And so it got very volatile for a while. And that's why a lot of people really started looking to the private money lending space, because there was a lot more risk associated with it. But hard money lenders are, they're licensed, they're like institutional lenders in most scenarios, and they are short term. So does that help kind of clear it up? Whereas a private money lender would be like someone like you or I. It's just what it sounds like. It's private money. There's no set restrictions. I'm not looking at your credit or, your income potential or whatnot. And same thing with a hard money lender. They're going to look at kind of your past projects, and they're going to analyze the project at hand, but they're not going to really be looking at like your credit either. That's how they differ from like a traditional mortgage lender that is analyzing your financials, right? So they're going to pull credit, income statements, W-2s, what have you. That would be if you were getting a traditional bank mortgage, whereas a hard money lender is looking at the asset itself and what is the value of that asset, and then asking you to bring forward like a small portion of the funds to carry it, so that if you default, there's less risk associated with them because you're covering that 20 to 30%. So that's what I was talking about when I was asking about first secondary, like lien holder positions and what my risk tolerance is, because I do get people that come to me and need that difference, right? They have a hard money loan and they need me to fund that 20 or 30%, but that hard money lender is not going to take a secondary lien position. They're going to want the primary lien position. So I have more risk, right? Because if that project isn't as successful as you say it is, and instead of selling it for 500,000, now you're only selling it for 450, I'm the one that's like, that's more at risk, because when you sell it, you're going to pay off the first lien holder, which would be that hard money lender first versus me. So some people will get a private money lender for the whole project, and there will just be like one lien on it. Some people will get multiple private money lenders, and then they'll have to kind of figure out who's in first for second position. But a hard money lender will always be that first secured primary lien holder.
Yeah, amazing. So much of a better answer than the one that I gave. Violet, did that answer your question?
Oh, that helped a lot. Yeah.
Great. Good. Okay. Anybody else have questions? Yep, never mind. Violet has another question. Let me unmute you again, Violet.
Yeah, I have a couple of questions.
Sorry.
But
Okay.
if somebody else has questions, if they want to raise their hand.
That's okay. None at the moment. Go ahead.
So where are the best places to get the 0% business credit? Because we've been looking at several that other people have suggested, and we find 17%. So I'm like, where is this elusive 0% business credit?
So usually you have to qualify for like lines of credit like that with your business. And usually that means you have to have built up that credit through like I go through Prime Corporate Services, which is the company that Pace really promotes within his own community. I have found success with them. They assigned me like a credit manager who worked on getting my business credit up to where I needed it to be to fully like leverage advantage of that. So that's what I meant when I said sometimes it's helpful to dial in with one of those companies. I'm not sure if you've spoken to anyone. It does, I'll be totally transparent, it does cost a little bit of money. There's some setup fee to onboard with them. So some people will take a call and decide it's not for them. I wouldn't know how to do it without having like a service provider like that, having managed me through that process.
Yeah, and I can add to that, but for me, I think sometimes we all take different roads there. I'm a little bit cheap. So when Prime Corporate Services came, I went the road of doing that on my own, right? I set up my own Wyoming LLC. I set up a subsidiary LLC here in Texas. I set up all of my LLCs under that. I acquired basically 30-day net accounts, and I started to build out my credit with Paydex there. And then when it came time to build out business credit, like no doc loans or, Loan Sir Bank, I looked up SBA friendly loaning banks. And you will find that you can go to them, and one of the best questions you can ask, do you do no doc loans or low doc loans? And you'll find out really fast which banks are the ones that you want to work with and which banks aren't. And they tend to be local banks, credit unions, things like that.
So there you go. Get dialed in with a mentor like that who can walk you through the process.
Just another road. I don't think one is any worse than the other. Okay. Any others, Violet?
Yes, but I don't know. Jen has a question too, so I want to give her an opportunity.
Okay. Yeah. Let me go over to Jen. That way we can fit as many as we can before Christine has to go. I know she's busy. So Jen, go ahead. Hey, Jen, are you there?
Is she muted?
Yeah, I think she might be muted. It's asking you to unmute, Jen. Okay. Well, all right. Go ahead, Violet. Ask your question. I can't get Jen unmuted.
Yeah, and she can type the question in the chat if she wants.
Yeah, absolutely.
So my husband and I we're kind of like trying to figure out where to get some equity from our home so that we can start lending possibly. And he wants to get a HELOC, but the home equity loans are way cheaper. So which do you use equity loans, or which one would be better, do you think?
Ooh, that's kind of a probably more personal question. I don't personally leverage that. I know that there are members of the community that have leveraged both with great success. That's probably, I would think, a great question for, your mortgage lender, who can really take a look at, where your equity is and how to structure that and what your options are. It would be hard for me without knowing more information about, your financial background to really probably weigh in comfortably on that, unless Damon, you have something to offer.
Yeah, I don't. I think my opinion would be the same. Yeah.
Well, one of them is 5% and the other is 7%. So the HELOC is a higher interest rate.
Yeah, I don't know. I think for me, I am of the mindset I don't pull out HELOCs to do any any kind of investing, right? I mean, I would under certain circumstances, but when it comes to houses, the HELOC is probably my last resort.
Violet, are you in sub 2? No. Are you in the creative financing with Pace Morby Facebook group?
Yes.
That might be a good question for that Facebook group. I would hesitate to post on there and just say, hey, I'm looking at 2 different options. Anybody who has done either, I would love for you to weigh in and offer some insight. And then you may find, I can think of very specifically a few sub 2 students that I know that have done both of those avenues. I don't know if they're comfortable with me sharing their name, so I'm not going to, but I would go ahead and post on that group, and some of those people may see it and offer some insight or reach out or whatnot. You can also go to that group and maybe search for past post and reach out to people that have either asked that question or commented and responded to that question, and you may get some helpful information there.
Well, it's great. We have somebody in the group who is a mortgage lender and investor, and she's already said, give her a call, Violet. I actually know Tasha, and yeah, phenomenal advice there. She'll steer you in that direction. Hey, Christine, do you have like 2 more minutes? I want to get Jen's question answered, and then I know I'll let you go because you got kids. And you gotta do home tonight. Yeah.
I'm okay. My husband just left to pick up the kids. I can hear him in the background. So we have probably 20 minutes before my house turns upside down with them barging in. So
yeah. Okay, so Jen, let's see if you can unmute now. Let's see if it'll let you unmute now. I guess not. Okay. So she's saying, my question is, how does she stream all the incoming requests into one place? When people reach out in IG, text, email, etc., does something have one place she needs them to incoming communication?
fantastic question. I love that. Because now you're thinking like a business owner, right? So yes, I don't know. I'm trying to think if I've had somebody reach out via Instagram. I would definitely direct them to call me or email me. But when I get text and phone calls, which is usually how people reach out, occasionally I'll get what I can tell is a very like canned email that went out to a bunch of people. But usually I'll get text or phone calls. And so I always set up a call time and put them on my calendar. I also, because I'm an agent, right, there is a way to, through my website, even through my social media, you can book an appointment with me. And so I always encourage people to do so. And then I always have them email me, even if it's a deal that I can't do. I say, hey, please email me, because I have a separate email that I use for this very purpose. And I have a folder on that literally is called like past request. And then I also have, every time I kind of onboard, if you will, like a new borrower partner, they have like their own folder. And now I have, some of them have like multiple folders, like by the property or the project. So I keep it really organized. I also have a CRM, again, because I'm an agent. And so now I have like a CRM like tag category of both my partners that I actually have successfully done transactions with. And then I do have others that maybe I don't, but that could potentially be partners down the road. And I plug in notes. If you and I have spoken, period, I probably have notes on you in my CRM. And when I was starting out and I was trying to get the business up and running and I was looking for opportunities to fund, I would send out emails. So you can send out emails via like a MailChimp. You can do some cool things on Canva, just saying like, hey, I have funds to expel. Reach out to me. I'd love to fund your next deal. You can post on like the Facebook groups or whatnot, and then take those contacts and plug them into either a CRM or an Excel. If you really want to get organized about it, and turn it into like an ongoing business and additional revenue stream, that's 100% how I would recommend it. Nowadays, I don't really do a lot of like prospecting, if you will, for it, because again, enough people know my name that they know to call me. And I have, more people calling me than I have, money to fund, quite frankly. So I'm not as communicative as I used to be with like sourcing new business. But I do keep it really organized. And like I said, I have that in my email, especially if people, like, sometimes I'll tell them like, hey, this deal doesn't sound like it's going to work, but send me like your bio, your investor bio. And I'll definitely put you in my email system. And, I'd love for you to reach out to me in the future, for next opportunities or whatnot. And then occasionally I would go back and like ping those people and just say, hey, what's going on? Do you have any upcoming projects? What have you?
Amazing. So, Christine, thank you. I can't thank you enough for coming on. Please let everybody know how they can reach you: email, Instagram, YouTube, Facebook. If we can put that out to everyone.
Yeah, I am on Instagram. My Instagram is Christine Labounty _real estate. So I'll actually type it into the chat. I'm pretty active on Instagram. If you go to my page, you'll see I post quite often there. Again, I'm a realtor, so a lot of it's, realtor type stuff. But I think my page is pretty engaging and interesting. I got some cool facts on there. I did just start a YouTube channel. It's in its infancy stages, but I would love for you to go and hit subscribe. That would be huge. It's just my name, Christine Labounty. Labounty is Labounty. So if you could head over to my YouTube channel and subscribe, I would appreciate that. You can email me at Christine@ChristineLabounty.com. And you're welcome to find me on Facebook as well. I'm always happy to offer any insight and share any value adds that I can. PACE and the Sub2 community and relationships like this have really just grown my business exponentially. And so I just want to be able to give back to as many people as I can. And if I can ever offer any insight that keeps you from losing money like I did initially, or, helps put some additional money in your pocket, I would, obviously love to help. And it looks like, Violet, are you asking, do you have one more question? I saw your hand raised a minute.
She's praising. She's
okay. Thank you.
Yeah. So amazing, Christine. I cannot tell you again how appreciative I am. I know I've said that 100 times now, but yeah, I'm super appreciative. And as Pace always says, why aren't we working together? I can't wait to form that relationship when this market stabilizes a little bit and I start doing fix and flips again here in Texas. But I've also maybe got a deal coming up that we can call Christine on.
Yeah.
So guys, I truly appreciate Christine. I appreciate everyone coming. As usual, please go smash and like the Creative Collective on
Yes.
YouTube, on Facebook, all of the above. We're trying to grow. We're trying to bring value to everybody. That's why we're here. And please, guys, go like all of Christine's stuff. That's what we're here for, is to bring value to everyone. We appreciate everyone so much. Lance?
Thank you. Thanks, Christine. Yeah, I have a little internet. Thanks, guys. I'm going to work on that.
Right on. Thanks, guys. Talk to
All right,
everyone
thank you.
soon. Thank you.
All right.